Have you ever looked at a massive new truck and wondered who can actually afford it? It can look like the owner has money to burn. But the driver may look like an ordinary working American.
So how are ordinary people driving vehicles worth $50,000, $60,000, or $70,000? The answer isn't simply that everyone became rich. Something else is making expensive vehicles appear affordable. And it starts with one deceptively simple number. The sticker price. Because $6,000 to $5,000 sounds enormous. But $800 a month sounds much easier. And that's where the psychology of car financing begins. The purchase doesn't necessarily become cheaper. The payment simply gets spread across more time. Longer loans make large purchases look smaller month by month. That's why 6- and 7-year auto loans have become so powerful. You lower today's payment by committing more of tomorrow's income. The future version of the buyer is the one who pays the difference. And there's another problem. The vehicle is losing value while the debt can remain. Cars generally depreciate instead of building wealth. The moment ownership begins, depreciation starts working against you. Here, Tamer spawn points. That's how negative equity can appear. Imagine owing $28,000 on something worth $23,000. That $5,000 difference doesn't simply disappear. It can follow you into your next vehicle. And that's where the trade-in cycle becomes dangerous. One loan can roll into another, then another. Until the buyer is running without actually moving forward. It's a financial treadmill disguised as an upgrade. But financing isn't the only reason people stretch their budgets. It sells an identity. The message is simple. This isn't just a vehicle. It's freedom, success, adventure, and status. And that changes how people think about spending. A practical decision suddenly becomes an emotional decision. The truck becomes a reward. A symbol that says, "I worked hard for this."
But a reward financed for years comes with a very long receipt. But a reward financed for years comes with a very long receipt. And that receipt is where the real cost hides. Because the payment is only one part of ownership. Insurance adds another monthly expense. Fuel adds another. Maintenance and repairs add even more.
And suddenly the real monthly cost looks very different.
$850 doesn't tell the whole story. The vehicle may actually consume far more from the household budget.
And that's when people start rearranging their lives around the car.
Maybe they choose a cheaper apartment.
Maybe they delay things they actually wanted.
And sometimes, savings become the sacrifice.
Some people even take on extra work.
They drive weekends or evenings just to increase their income.
And sometimes that extra income goes straight back into the vehicle. Work creates income. Income pays the car. And the cycle repeats.
That can turn a vehicle into another source of financial pressure.
A repair gets charged.
Fuel gets charged.
And suddenly, the car payment isn't the only debt growing.
One manageable expense can create several unmanageable ones. Now imagine a household with two expensive vehicles.
Now imagine a household with two expensive vehicles.
$850 here, $700 there. $850 here, $700 there. Then add insurance and fuel. The transportation budget can become enormous.
And every dollar has to come from somewhere.
Money spent here can't be invested there.
Every investment starts as a small seed. That's the opportunity cost most people never see. Most people never see.
Imagine redirecting a large monthly payment toward long-term investing.
Over time, regular contributions can compound. One asset generally gets older. The other can potentially grow.
That doesn't mean cars are bad.
It means the cost should fit your financial life.
Sometimes a reliable used vehicle can create far more breathing room.
Lower payments can leave money available for other priorities. Lower payments, money available for other priorities. Savings. Investing. Debt reduction. Debt reduction. Flexibility. Financial flexibility is something an expensive truck can't provide by itself.
So here's a better way to think about buying a vehicle. Don't ask only, can I make the payment? Ask what the entire vehicle costs you every month.
First, analyze all expenses. Then compare that cost with your actual take-home income. Then compare that cost with your actual take-home income. Could you still survive a financial emergency? Could you handle an expensive repair without borrowing? No problem. I have savings for this. Could you keep investing while making the payment? If the answer is no, the vehicle may be too expensive.
Because looking wealthy and being wealthy are completely different things. The driveway doesn't show you someone's balance sheet. A beautiful vehicle doesn't tell you how much someone owes.
And an ordinary vehicle doesn't tell you how much someone has built. That's why judging wealth by vehicles can be completely misleading.
The next time you see a giant truck on the highway, remember this. You have no idea what the financial story looks like behind the wheel.
The real story isn't what the vehicle looks like. It's what the purchase is doing to the owner's future. The smartest vehicle isn't necessarily the most impressive one. It's the one that lets you keep moving forward financially.
Because real wealth isn't parked in your driveway. It's built quietly, through the freedom to live below your means and keep more of your future.